Hello everybody, welcome back for another video. Hope you're all doing well and that you are all having a great day. To start things off, this is something that I never thought I would ever read in the headlines. The US is launching a criminal probe into Bitcoin price manipulation. The Justice Department has opened a criminal probe into whether traders are manipulating the price of Bitcoin and other digital currencies, dramatically ratcheting up U.S. scrutiny of red-hot markets that critics say are rife with misconduct, according to four people familiar with the matter. The investigation is focused on illegal practices that can influence prices, such as spoofing or flooding the market with fake orders to trick other traders into buying or selling, said the people who asked not to be identified because the review is private. Federal prosecutors are working with the Commodity Future Trading Commission, a financial regulator that oversees derivatives tied to Bitcoin, the people said. Authorities worry that virtual currencies are susceptible to fraud for multiple reasons: skepticism that all exchanges are actively pursuing cheaters, wild price swings that could make it easy to push valuations around, and a lack of regulations like the one that governs stocks and other assets. Bitcoin extended its Thursday decline after Bloomberg News reported the investigation and was down 3% to 7,409 as of 9:30 a.m. London time. Such concerns have prompted China to ban cryptocurrency exchanges and nations including Japan and the Philippines to regulate them, contributing to a slump that has sent Bitcoin below $8,000 this year. Still, digital coins continue to be a global investment craze. So here's where it's kind of very interesting. The illicit tactics that the Justice Department is looking into include spoofing and wash trading, forms of cheating that regulators have spent years trying to root out of futures and equities markets, the people said. In spoofing, a trader submits a spate of orders and then cancels them once prices move in a desired direction. Wash trades involve a cheater trading with herself to give a false impression of market demand that lures others to dive into coins. Prosecutors are examining, including Bitcoin and Ether, the people said. Around January, I want to say when the prices first started dropping, for those who've been with the channel for a while now, you may or may not remember, I mentioned that I had not in the personal or underground information, but there were people talking about that they were noticing very weird movements on crypto exchanges, and it pretty much came down to is that people were not only faking Bitcoin's volume, and I've said this many times before. A lot of people got upset with me in the comment section thinking that I meant that Bitcoin wasn't what it is or what it should be. But even as time has gone on and more exchanges have opened up fiat pairings for Ethereum, Ripple, Litecoin, and Bitcoin Cash and every other, or the other major coins, a lot of people have been realizing that there are around 5 or 6 exchanges that are sending Bitcoin back and forth between each other in like very high amounts, about $5 or $6 million per day, rather per account, swapping them back and forth between these exchanges over and over to push the amount of volume that is being gone through the exchanges every single day. And along with this as well, I said this as well. There was news, this had to be February around this time. People were saying that there were a lot of trades that were being put in. People were putting sell orders for $5 to $10 million worth of Bitcoin. And when you see a sell order that high, if you're, buying and selling between $200, $300, $400, $500, maybe $3,000, if someone has $10 million sell order at one go, you're going to think that something is completely wrong and you're going to start selling. But these people have their sells and buys set up so that only certain things, their buy and sell orders will only go through when certain things are met. But everyone else still sees these gigantic sell orders and or buy orders, and the market starts to move in a certain way. And this is exactly what I was saying before. And I mean, it's not the greatest feeling to be right, especially in the case of price manipulation. But we've been talking about this for quite some time now. It's fairly obvious that this has been happening without a doubt, whether it is major big players who are just trying to get extra coins themselves, whether it's the banks or rich people just trying to get in at a lower price, or people just trying to push the price of cryptocurrencies down in general so that it doesn't seem as big as a threat to traditional finance and or to the banks, whatever the case might be. The fact that there is a US-backed investigation into all of this the saying goes in English, I'm not sure if you guys have it as well. We say, like, where there's smoke, there's fire. You don't start an investigation unless you are pretty certain that something is happening in some sort of way. This is why I was saying before, the entire thing that happened when the prices dropped, when the guy from Mt. Gox sold $400 million on exchanges, should have never happened. 0% of it. I don't, having cryptocurrencies in your possession is one thing, controlling your own money is one thing. But when you are selling or buying on an exchange, you should never be able to put in a $100 million sell order. That should never, ever happen. Most exchanges, I don't want to say by law, I don't make the law. It should literally be like a maximum of maybe like $100,000 a day if you have like a certain type of account. There should be no way that anybody should be able to put an order like this because it completely destroys the market. There was even the thing that I read yesterday where the guy was talking about, he said he was shocked when the New York Stock Exchange said that they were going to get into cryptocurrencies and the market didn't go over $1 trillion. Why was the market going down? It's now between this, it's now between the Mt. Gox guy, and it's now between Bitcoin futures kind of manipulating everything. If you still don't believe that the market is being rigged or manipulated, I honestly don't know what to tell you. I don't know what technical analysis you think is really going on. There are so many people, we spoke about this before, not to drag this on, but this is very important. I said this before and people were like, you're lying. 96% of all Bitcoin is held within 4% of wallets. These people are multi-billionaires at this point. They're going to do whatever they need to do in order to manipulate the market as hard as possible so that they can become richer. When you have billions of dollars worth of cryptocurrencies, especially with Bitcoin, especially when Bitcoin is pegged to every other coin, you know, these people have not geniuses, they have coders and developers and all these other people who know how to manipulate markets with them because the market is so unregulated. And it's things like this that make the Justice Department and the freaking United States government have to step in because of all these things that are going on. Like it's if we had some type of cap or limit, at least on exchanges, when you're sending money back and forth between you and your friend, you know, go for it. If you have $10 million, you want to send your friend $10 million on your through your wallets, go for it. But when it comes to putting out sell orders or fake buy orders like that, these people don't understand, and I guess they really don't care because they're so rich that they are messing with other people's lives. I'm sure a lot of you are very frustrated at all the stuff that's been going on with these prices. It's really ridiculous right now. On the same exact wavelength, there was a bit of news earlier that the price of Bitcoin was very close to hitting $7,000. There were indications that, you know, we could eventually fall around to 6,900, what have you, depending on the price where everything planned on moving. But at least for the moment, the way that it seems now when I'm looking at the prices, a lot of the altcoins, Ripple had very good news. I think they just got listed on, I want to say Revolut's app or something like that, which is a really big, popular app, website, whatever you want to call it. EOS is also back up. A lot of the altcoins are slowly pushing back up. I'm still hopeful that by the end of the year, regardless of what happens to Bitcoin, I love Bitcoin. I think it's great. I think it's cool that it's the number one coin, that it was the first coin that we ever had. But this realistically has to stop. When we have a huge bull run like we had over the last couple of weeks and all the coins are going up 20, 30, 40, 50%, this is showing that people are bullish on certain altcoins. There were times when we had certain altcoins that were going up 35%. Other altcoins were going up 16%, some of them 77%, while Bitcoin was going up around 4%. The moment Bitcoin starts falling, everything else gets dragged down. I don't know if we need, I don't think we have to write a petition. That sounds a little not cheesy. Look at this. Like, come on. This is a huge indicator that these projects are demanding to go up higher. I don't know how we can kind of reach out to exchanges a bit more to tell them to add more not only fiat pairs, but crypto trading pairs between other coins, like a lot of the other apps have been doing since Coinbase has taken their jolly old time when it comes to adding all these other things. But this is clear as day now. This is clear that this is all happening, especially when you have EOS and Tron about to launch in a couple of days. What is it, about a week or something like that now? There's no reason why both these coins should not be double where they are now. Just going to completely throw that out there. But yeah, this is literally the major news of the day. Someone wrote this in the comment section. I can't remember your username, but thank you for posting it. I'm sure you know who you are if you're listening to this. Yeah, thank you for shedding some light on this so that this was actually happening. I've had a very busy day, so I didn't get to look through as much of the news as I would have liked to. But yeah, this is what's going on. Let's see exactly if this bears any fruit, if they actually end up finding anything or find a way to not prosecute people, but kind of put a cap on it. Like it's impossible. You cannot have cryptocurrency exchanges with things like this being able to run rampant because it destroys everyone else's money. Bitcoin going down should not affect 1,600 other coins that are sitting on the market. I'm sorry, that's not how it should be. I don't care if you are a Bitcoin maximalist or not. Continuing on, Coinbase is in the news. They had a meeting yesterday, or like it was a thing. I want to say it was CNBC. I can't remember exactly which news station it was. They said they had a major announcement. We have a huge announcement. Everybody has to hear this. It was a huge live event. And this is what they pretty much announced. Coinbase announced Wednesday that it is launching a new version of its GDAX platform called Coinbase Pro, and they're acquiring crypto trading relay platform Paradex. The new platform seeks to make the trading experience easier and more intuitive, according to the startup. Other features include a new chart system, which provides streamlined access to historical data and a consolidated portfolio view. Beyond simply trading assets, Coinbase Pro aims to provide a new host of features for investors, according to the release, which reads, "Our vision is to give customers the ability to participate in services like staking and protocol voting that are distinct to crypto. As a decentralized ecosystem advances, we expect there will be many more opportunities for customers to interact with digital assets in new and unique ways. As part of the effort to let customers use digital assets, Coinbase Pro will integrate Paradex support over the next few weeks, which will enable users to trade hundreds of tokens directly from their wallets." Right. Initially, this experience is for our customers outside the US, but will be available to US customers as soon as we attain regulatory clearance, which we're actively working toward. Paradex enables investors to trade ERC20 tokens directly from their digital token wallets by acting as a relay for transfers. Hardware wallets, notably the Ledger wallet, are supported as well. So we had news from a couple weeks ago about Coinbase and their desire to add ERC20 token support. And this seems to be exactly what it is. So if you got a chance to view the actual live video or even online on YouTube about exactly what was going on, when the guy who was talking said that they had acquired Paradex and that people were allowed to be trading ERC20 tokens and hundreds of other tokens on their platform, the guy made sure to say in clear as crystal terms that this was not an exchange. He said this is anything. It's a like a blackboard, a chalkboard. He said something along the lines of a board. He said something for you to see what prices are and to kind of get a heads up on what's going on in, historical data and consolidated portfolio view. He made sure to say that this is not Coinbase becoming an ERC20 token exchange, but they will have, you will be allowed to trade ERC20 tokens as well as other tokens on the platform. So this may be their sideline or like way in order to be able to add more tokens, because at this point, Coinbase understands that they're losing money. SBI is launching in a couple of weeks, as is the exchange from NASDAQ. There's also another one from something from the New York Stock Exchange. The Boston Exchange and the Chicago Exchange are all launching some type of crypto exchange very, very soon. And they have all announced they're going to be adding the top 6 or the top 10 coins. Something that Coinbase does not have. So it's going to be interesting to see exactly how this plays out, simply because I wonder if this will lead the way to them announcing which coins will be put directly on the original Coinbase platform, because as of now, it seems like this will be a triangular formation between Coinbase Pro, and Paradex that they all control so that they can kind of get a leg up on the competition. But I'm also... I want to see what this does to the prices, because as of now, you can't say that you have access to hundreds of different tokens. But if they start announcing certain coins, this will definitely have a huge impact on the price of what's going on. And the guy who was talking as well, he said that they're still actively working on trying to become a not only an exchange for securities, but also for derivative coins and other coins. They want legal, they want regulatory certainty of exactly what's going to happen with all these coins before they end up adding them onto the original Coinbase. But even then, I guess a step in the right direction. It's about time that they announce something, because Coinbase has definitely been slacking, especially with all the other news that we've been getting. Next up, IOTA is in the news. The United Nations Office for Project Services, the UNOPS, or UNOPS, I don't know if you can call it UNOPS, is teaming up with the IOTA Foundation to see how the project's distributed ledger technology can help the UN streamline its workflows. The UNOPS announced the partnership on Tuesday, saying the two organizations are looking into increasing the operation efficiency of the UN office using IOTA's Tangle technology. The startup notably does not use a blockchain the same way like Bitcoin and Ethereum do, yet this is one reason the US division chose to work with the foundation, said UNOPS special advisor on blockchain technology, Yoshiyuki Yamamoto. Cool name. He said that he told CoinDesk that IOTA's distributed ledger in particular can be operated on battery power or alternative connectivity networks, which can be extremely useful in areas with sporadic access to high-speed internet connectivity or even electricity. Further, IOTA's ledger is easily compatible with Internet of Things devices, which do not have high computing requirements. That being said, the partnership is largely about learning how IOTA and the UNOPS can best utilize the technology. I won't really go into what they said. They always just end up praising it a tiny bit. So IOTA has had issues over the last couple of months, if you want to say that. There were problems with their wallet. A lot of people have been losing coins. It's nice to hear that they are still in the news. I was watching, I didn't have the most favorable opinion on IOTA for a number of reasons, which I'm not going to get into in this video. But I like what they're doing. There are a lot of, how do I say this? There's a lot of skepticism when it comes to the Tangle, simply because there seems to be no way for them to stop spam attacks on the network, which I'm sure they're probably working on. But it's nice to hear that someone or an organization as large as the UN will be using their blockchain, their Tangle, to see exactly if it can benefit them. It's always a good day when you hear any type of news about any coin that is being integrated or might be integrated into something that, you know, has real world purpose. So good job for the IOTA team. Next up, German shares and securities marketplace organizer Deutsche Börse, or the DB, said it is deep at work examining cryptocurrency integration options. Speaking at an industry event, the company's head of clients, products, and core markets, Jeffrey Tessler, told audience members that the company was busy understanding the technology behind Bitcoin before moving forward with it. The progress is a step forward from previous remarks in March when Tessler implied Bitcoin's volatility prevented DB from entering any related markets at the time. He said, before we move forward with anything like Bitcoin, we want to make sure we understand the underlying transaction, which isn't the easiest thing to do. We are deep at work with it, he said in this week's update. While not stating interest or plans relating to offering specific Bitcoin products, Tessler acknowledged that DB was not at the same stage as its US rivals CBOE and CME, both of which launched Bitcoin futures last December. An eventual debut would hence likely focus on a similar launch. This also is interesting because Germany a couple of days ago, I think it wasn't Poland. They went to some other country in the eastern part of Europe, and they've been having like discussions with them. So I assume they're trying to form some type of consensus type thing where they kind of come together and make sure that they're all on the same page when it comes to rules, because you better believe that they're all going to start offering some type of derivatives and their future platform or something like that. And they also actively, I'm sure, want to work on crypto exchanges as well. Like I said, there's big money to be made in cryptocurrency trading. So if you can get in at it first, especially if you are the first in your continent to get in on it, people will flow to you and start giving you the money first. So this one is kind of interesting. Julian Zawatowski, the CEO of Golem, a smart contracts-based decentralized supercomputer, stated that Ethereum is the most promising blockchain platform in the global cryptocurrency sector, and no other blockchain's protocol comes remotely close to Ethereum's potential and applicability. Zawistowski, who leads the development and commercialization of Golem, stated that his development team has been building applications on top of the Ethereum blockchain network since its early days, and by far, Ethereum is the most promising blockchain protocol in the global sector. He said Ethereum is by far the most promising platform, and we cannot see another one that's remotely close to it. Of course, we would like to interact with other blockchain more, and once Ethereum scales, we will be able to do it on a wider manner. We have been supporting and building on top of Ethereum since its very early days. In fact, we realized that Golem would be possible to be built and work on Ethereum. And thanks to Ethereum, I guess that's the end of it. I thought that was a bit more. This is interesting to me. First of all, I love Ethereum. I love everything about Ethereum. I love the entire project. I love what they do. But what's been happening over the last couple of months, as other platforms have been adding smart contracts, especially since EOS is launching very soon. A lot of coins that planned on launching on Ethereum have switched over to other projects. So this is going to be quite interesting to see what happens over I want to say the next 6 months. We've had a little bit of news that Ethereum should potentially be launching Casper and potentially Plasma over the next couple of months. If they do this, I think Ethereum, because of its name and because of its backing, will probably skyrocket to the top. But if they do not do this over the next couple of months, I think people will start to try to chip away at their market cap and try to take a lot of what they have. There's a lot of hype around Ethereum still, and I still think that is going to be one of the largest coins for a very long time, but we have to see if they are going to be able to kind of get it together. I think that's the nicest way of pretty much saying it. Last up, Weiss Ratings is once again in the news, but it's not how you think. The founder of Weiss Ratings agency, Martin D. Weiss, has forecast that an upcoming rule change in U.S. banking will compel investors to move their money away. In a dedicated blog post about the watering down of the Volcker rule, which limits banks' abilities to gamble deposited funds, Weiss claims that the plan is coming precisely at a time when risk-taking has reached a peak and key risk asset threatens to cause severe losses. The examination of Volcker continues Weiss's preoccupation with cryptocurrency in 2018. In January, the agency published the world's first ratings for the market, causing controversy when it awarded Bitcoin a C+ and championed Ethereum with a B rating. For Martin D. Weiss and fellow author analyst Juan M. Villaverde, the opportunities for cryptocurrency to gain trust and usage as a result of banking behaviors are obvious. With this rule change, the authorities will make it easier for mega banks to take big risks with other people's money. An accompanying press report quotes them as writing, "In the future, cryptocurrencies will do such a fundamentally better job as a safe depository of funds. It's difficult to envision a world in which this technology does not become a game changer for money and banking." A lot of people, I think, don't know exactly what happens when a bank has your money. I'm going to say if you have a bank account, I'm sure a large portion of people listening to this do have a bank account. You may have noticed when you get money at the end of the year, you get like a little return on the money that you have in the bank. It's typically anywhere from like 0.05% to like 0.5% of the money that you have in your account. And they say, this is like a little, thank you for what you gave us. This is cool. In around 2005, this was around 6 to 7%. So this is what a lot of rich people were actually using they would leave their money in the bank. End of the year, they would make 6-7% is or was good before we had cryptocurrencies. And what banks do is when you deposit your money with them, it is in all accordance their money at that moment, and they actually invest in different things and in different markets and other things around the world and other markets you cannot begin to believe exist, and they try to make a little profit from it or a large profit, sometime around 60%. A lot of people do not know that. And at the end of it, when they've made 60% off of the money that you have lent them, they drop a 10-cent piece in your lap and say thank you for what you've done. But because of this happening, when banks have more liberty to use your money and gamble deposited funds, I think the stuff is going to hit the fan, and a lot of people don't see it coming. There's so much happening right now in the traditional markets, in the banks with debt, world debt, currencies losing value. It's going to get dramatic very, very fast. So I like that Weiss Ratings finally came out and said something nice about cryptocurrencies. But I think this is going to be a very interesting time for all of us, and not just in cryptocurrency world, but in everything. It's like this is all predestined in a way, and I'm not trying to, give you like a, like an oracle reading or anything like that, but all of this is adding up in some sort of way that I can't really put words to, and I'm sure you all see it as well. Governments don't praise cryptocurrencies. The UN doesn't look to use a cryptocurrencies ledger out of nowhere. I think they see what's coming. Maybe some nations don't, but I think we're still headed for something very, very big. And this is why I still believe when price predictions say that Bitcoin is going to hit $250,000 over the next couple of years, it's all kind of lining up in a way, because the news that we have now and the stuff that's going on, I think it's all very interesting, to say the least. Alrighty, everyone. That's definitely going to do it for this video. I hope you guys had an absolutely wonderful day. Wherever you are, wherever you might be, I hope it was absolutely fantastic. Thank you once again for all the support. I appreciate it more than you can begin to possibly imagine. Thank you once again for watching, and I will talk to you all soon. See you.